Aloha everyone. Sorry for the late video. My sincerest apologies, but the Mets game went long, extra innings. They were losing 0-5. They won 9-5. Incredible. 7 wins in a row. They hit like 43 home runs this month, which is basically an all-time monthly record for them. So quite an incredible time. That took priority over today's market. But getting to today's market, it looks like that we've already blown our load basically on this market. We've rallied so hard off the Monday lows in a straight V repair shape fashion that it could be the beginning of a potential rally. I don't see this being anything like the October move higher for one reason. The October move, by the time we made that V-shaped rally, we were already back above the 200-day moving average. This time we're not in the NASDAQ, and this time we're not in the Russell 2000 or the S&P 500. And also a lot of those leading stocks like that were showing up in October, they were above their 200-day moving averages even during the pullback. This time around, they're all below the 200-day moving average, and just more volatility. So I wouldn't expect these gains to necessarily continue. And the thing is that with volume lower today on the NASDAQ, lower on the S&P 500, slightly higher in the Russell 2000, it's kind of a mixed signal. But overall, the volume on this upside move is well below the volume on the downside move. We do not have an accommodative Fed, so we're going to need to see real accumulation in this market if we're going to get anything good going. But the mere fact that we're bouncing off these lows on smaller volume than on the sell-off in the S&P 500, NASDAQ, Russell 2000, it indicates to me that we're going to need to retest the lows. And another thing that tells me we need to retest the lows, you can see here back in October that we closed near the highs of the days, the 2 days that we hit the lows. It wasn't in the most upper portion of the range, the second day following the lows, but still it was clearly, we were closing in the highs. If you look at the NASDAQ on that first day on Monday, we closed well off the lows. S&P 500, as you can see, we weren't even off anywhere like closing near the highs, and the Russell 2000 closed lower than where it opened. So really the only strong index on the day was the NASDAQ, and it closed well off the highs. So it's hard to say that this is just going to continue without a retest. And I tell you what, if we start to roll over here with the 50-day moving average about to death cross below the 200-day moving average, that's just going to be more confirmation that I need to look to increase my short positions on this overall market. And if you think that, well, this can be the start, there's some bases out there that are forming. No, there isn't. Every day for the past week, or since Thursday, so for one full week, I scan thousands of charts intraday, and these are the best patterns tonight. So first off, it's nice to see DY. Unfortunately, we got shaken out here. DY knocked me out of my entire position in both of my portfolios on this day with the flash crash Monday morning open. But it's retaken the 50-day moving average on very strong volume with a big surge in BOP and a pocket pivot point. Today, BOP was stronger, volume was well above average, and it closed near its highs. This is excellent, but is this breakout, buyable? Hell no. This could be a W bottom pattern, but remember, on a technically correct W bottom pattern, volume on the second leg down is lower than volume on the first leg down. We have the exact opposite. V-shaped breakouts tend to fail more often than they succeed. So if I'm going to get long DY, I need to see it build a handle here. Then I can get a lower risk entry on the stock and I can add back. So DY is one of the few stocks that look good. And then, of course, there's Post, which I profiled on StockTwits yesterday evening, and also have flagged it for a couple of days, and I'm going to flag it again today. It's building a nice consolidation pattern, but it's way too early. That 50-day moving average needs to catch up with price before I would think about buying a breakout and Post in this market. And then, of course, AEMD has shown up again, this time with a pocket pivot point buy signal. The only problem is it's finishing well off its intraday highs, but still love the max green BOP, the lower volume on the pullbacks, the strong volume on the up days. It's just a start. Obviously, this is not the kind of pattern I'd want to buy. And then there's HCKT. So I moved my final stop on HCKT actually to the gap up low. I didn't think that with the market starting to get weak, because on Thursday it wasn't weak yet. That's Monday, so that's Friday. So this is what it looked like on Thursday. Nice. This is what it looked like on Friday. But I was like, man, that's a nice chart pattern. There's no way if it's strong it'll eclipse this low without then eclipsing that low, 1207. Well, I was wrong because it didn't hit 1207 this day. It hit 1229. But let's say then, this is what I probably would have done following this day right here on the 24th if I was still long. We're still tracking it on an end-of-day basis, I do believe. Maybe we're not. Yeah, we have to be still tracking on an end-of-day basis. Duh. So we're still tracking this one on an end-of-day basis, but I'm out. But even if I wouldn't have been out, I would have moved my final sell stop to 1228. And today it clipped 1228. But besides that, HCKT is one of the few remaining beautiful chart patterns out there, in my opinion. There's post, HCKT, and then AEMD is starting. Besides that, there's nada. Unless DY, and then we're still long DXCM. This one looks very good overall in this tape also. But some recent strong stocks, EFOI, let's go to an arithmetic chart. That now looks toppy. At 19, I could see this going all the way back and filling this gap right here in the $10 level. So I know it's kind of hard to see on my charts, but I'm so used to looking at charts like this, I apologize. But this is getting quite parabolic to me. It isn't extremely parabolic, but on a weekly, it's a little bit more visible. Unsustainable uptrend in this kind of market. But EFOI is an intraday short candidate if it starts to either gap up in the morning and then fade, goes green to red, and or rolls over late in the day. Then there's Ford, which has been an excellent contract winner, and in 3 days is up 127%. And many day trading chat rooms were all over this one in the low ones way before it hit 128 and then ran all the way up to 193. So, you know, this was in early morning. It was gapping up from its 103 close to 101. It wasn't really gapping up, but there was activity pre-markets, and then it blew through those highs of 103 early on, and it's been uptrending since. It now looks to me like it is spinning out another top, so I will be watching Ford for the same exact thing I'll be watching for EFOI. And then I noticed one of the great stock looking technical patterns in this market, Beat, could be trying to spin out a top also. So Beat would be one to watch for a breakdown, and I would expect that to retest the 10 or 20-day moving average on this chart. But overall, there's not a lot of good-looking patterns. I keep pressing the wrong buttons over and over. My apologies. But HCKT, Post, and AEMD are the only ones for now. And I tell you what, 3 stocks out of over 10,000 stocks I track, 8,800 in the Warden system, is not really, you know, doesn't bode well for the market short term. So we've looked like we've rallied right into resistance with the lower volume, straight shot V move towards the 200-day moving average. And as you can see here, the death cross is well underway in the New York Stock Exchange. The Dow Jones Transportation Average led this whole thing lower. The Dow Jones Industrial Average, same kind of weakness, and it's only probably a matter of time for the NASDAQ joins. So major resistance is coming up, guys. I recommend to just take it easy on an end-of-day basis. Once again, no longs, no shorts, no sells, no covers.